Hello everyone, welcome to another lovely episode with JFX. And this is cryptocurrency. Okay, this is cryptocurrency. And for those of you who are not familiar with me, I am a technical analyst and I'm mainly a Forex trader. But what I'm doing here today is technical analysis on cryptocurrency. Okay, so I'm going to be doing a little bit of harmonic patterns. I know I just concluded the series of mentorship. For those of you who don't know, there's a mentorship episode, series of episodes teaching you how harmonic patterns work. For those of you who have watched those series and you now understand harmonic patterns, I'm going to be displaying a top-down analysis, just like how I've been doing it in some of the series and, with the theoretical aspects and practicals of how harmonic patterns work, so you can be able to apply it yourself. Okay. But on today's video, I'm applying that analysis on cryptocurrency, which we're looking into TON USDT. Okay. So what is TON USDT? TON is the official cryptocurrency of Telegram. When I say official, I mean if you are using if you're a content creator, let's say you're a content creator and you're into monetizations and revenue on social media, Telegram pays its own revenue using TON. So TON is the official, let's say, currency for the Telegram app. We also have NOT and few other tokens, but TON is the official currency which you're going to be getting revenue from while you earn from the app. Okay, so this is a weekly chart on TON USDT, which I'm going to be using harmonic pattern principles with Fibonacci ratios and market structure to break down what I think could be happening next. So that is what we're doing in this video, okay? Now, I just gave you guys a breakdown on why we're using this cryptocurrency pair today. And for those of you who don't know, I also do trade crypto, but I don't, really post analysis on cryptocurrencies like that. So on this episode, I decided to do that. And also, why I'm looking into TON is because I'm expecting a massive move, and I decided to share this analysis for those of you who are also into the currency. Okay, so now let's look into the price action. From what we can see here, this was introduced in the chart was made available in 2022, if I'm not mistaken. I'm saying no, sorry, I think 2023. Let's go to the monthly time frame. Okay, so that was in 2023. It had a little bit of rally to the upside, and then we have been in the corrective phase till 2025. Okay, so currently we are at a major key level from when this particular price action was made available. Now, for those of you who don't know what price action is, it's simply just chart representations of the transactions and let's say the data presentation of this particular currency paired against USDT. So when you pair the TON, which is the ecosystem of the Telegram platform, with USDT, which is the stable currency for US dollar in cryptocurrency, which is USDT. It's cryptocurrency, but it's US dollar. So when you trade dollar in crypto, it's the US dollar tether, which is USDT. But when you trade dollar in currency, which is Forex, is USD. So in crypto, it's called USDT. And TON is representing Telegram. So when you pair these two different ecosystems together, you get this pair, which we're now calling TON USDT. So this price action is showing you the bullish and bearish momentum of these pairs. So we're trying to do a technical analysis using a particular method called harmonic patterns. This method comprises of Fibonacci ratios, market structure, and understanding the overall direction of the trend using premium and discount. Basically, that's how I use it. Okay, so there are a series of videos on how to use harmonic patterns made available on the YouTube channel here. You can go check that out. And there are other methods like Elliott Wave, Smart Money Concept, and Wyckoff, if you're interested in studying that. Now, this is a key level because as you can see, it's a resistance level when the initial price actions were released, and then it became a major support. So it's now a support, previously a resistance. Okay, so it's going to be a major key level, and this is on the monthly time frame. Okay, so moving forward, we have to identify those other key levels we can see that are visible. All right, so we have this here, which as we can see here price made a certain resistance to this level, which is around $5. So 1 ton per dollar is $5. Okay, so I'm calling it $5 because it's USDT. So we could say 5 USDT, but let's just say $5 for the sake of we being forex traders. Okay. So as we can see, when the drop started, we could see the retracement here. Price created a new resistance level and then blah, blah, blah. But what we can see is that this is also a major key level. Okay, so I'm going to identify that. I'm trying to do this from a basic level. This is how I would make analysis, whether I'm using SMC or I'm using Wyckoff or I'm using harmonic patterns. My aim of using multiple methods is to show you that it doesn't matter the technical analysis method you use. What matters is how well you understand what you're doing. And once you have that insight of what you're doing on a professional level, you can then use the method according to the principles, like how you identify each pattern within harmonic patterns, okay, and what makes those patterns valid. So now, from the monthly time frame, we identify the key levels. We're now on the weekly, okay. So on the weekly chart, I'm going to identify the range, which is following market structure. So on the retracement here, we could see there was a clear market structure like this. So this low was broken, price went up, cleared at this high, right? Created this one, fell, created this low. Now we have this high. So if we should identify the market structure, it would be high, lower low, lower high, lower low, lower high. So this is market structure. But if we should look at the bigger scale in terms of range and supply and demand, this would be the major range. Why is that? As we can see, this low never made it into premium. So this is still an accumulation within discount of the weekly time frame. Okay, so this is an accumulation. Now, when we say an accumulation, what does that mean? That simply means the price action is not really in any formal direction. It's simply just accumulating funds. So it's simply getting buyers, early buyers and early sellers, and probably going to stop them out. So creating equal highs and equal lows. And that is something we can see visible here. In SMC, we call that liquidity. We can also see visible here. So if I'm talking about liquidity, I'm talking about supply and demand. What are we doing and why is it called harmonic patterns top-down analysis? Well, that is because if you do go watch the series which I put out on harmonic patterns, you'll find out that I made mention that I use my pattern in confluence with smart money concepts. Okay, so I don't just trade pure harmonic patterns. I mix it with smart money concepts. Harmonic patterns are higher time frame confluence for me when I'm using smart money concepts. Elliott wave are also higher time frame confluence for me. Okay, so I use them to understand the overall direction of the trend and also to understand the range of which market structure is presenting. I also use the concepts within smart money to also understand the range. I'm not saying I'm strictly a smart money trader. I do confluence trading. To me, technical methods are just methods. What happens is how well you understand the principles and the laws that govern those methods. Okay, so that's what I'm trying to do this. I'm trying to show you you don't have to be a smart money trader or an ICT trader before you can be successful, or you have to be a CTR or WWW trader for you to know how to make technical analysis. All you have to do is just know what governs those principles, like higher high, lower low, internal structure, external structure, rally based rally, or drop based drop. Those are the principles that matter. When you understand those things, you can make proper technical analysis. So now, when we say this is within discount, we can say, okay, with this price action, using the law of supply and demand, we can see a swing, a supply zone within this range, right? So that would be a rally based drop. So that would be a supply zone. I'm doing it from a basic level. Those of you who know supply and demand. So looking at this also, we can see multiple mitigations. We can see 1, 2. So in a form of a double top. Now, if you're familiar with harmonic patterns, you can see where I'm trying to go with this. Okay. So if you look at harmonic patterns, we are mostly seeing patterns like this. I have a friend who told me harmonic patterns are just W and Y and M. Why is it called harmonic patterns? Well, that's because you forgot to add the principles that come with the X, A, B, C, D. Because when you do that, you add the confluence of Fibonacci, and then you start to measure mathematical levels of each range, which now makes it a mathematical calculation. So harmonic patterns are logical technical methods. It's just when you use the patterns without the logic, it's just a regular M. And if you understand how harmonic patterns work, you would also understand that it is also, in terms of SMC, showing you that a double bottom is likely liquidity because this is a bearish pattern. And a double top is also likely liquidity. And these are principles that when you start trading SMC, you start to understand why these are called liquidity. Okay, so harmonic patterns is very, very logical and also very, very useful for an SMC trader if you understand why or how. Okay, so now we see double mitigations here, which is in line with this bearish price action. And then when we say this is an accumulation, where they're trying to accumulate funds, and this is a bearish trend, and we can see multiple bearish mitigations and also bullish mitigations here, right? So there's likely every tendency that this is about to make a major move, either to the bullish side or to the bearish side. But if I was to stake my money on, that will be based on what price action is doing. And that's to tell you that this is within discount. We don't sell within discount. We buy discount and sell premium. And then also, in terms of long term, Telegram is a platform that is evolving. It keeps evolving. So in terms of stocks understanding, from what we have been studying in the Blending Traders with Success series, which have been releasing on the YouTube platform, you would understand that stocks in fundamental basics adds its own confluence to the movements of price action. So we can also say with this confluence, the stocks aspect of Telegram from a fundamental level and a fundamental analysis level is also a backup to an ecosystem. So this is not just an average meme coin or an average meme, crypto coin. This is an encrypted currency for a digital platform. So we're not expecting it to crash. And if it's on the lowest low here, which we can see from when it was released as a publicly traded platform, we can also say in support of this whole analysis, this could be a bullish accumulation, right? But a spring is not inevitable if we're looking at it from the perspective of Wyckoff. Okay, now let's go to the lower time frame. That's enough insight on the weekly. So when we look at this is within discount. Okay, this is a bearish range. For the long run, we are bullish. We're going to use the analysis of what's going on here and some technical methods from, harmonic patterns as confluence to understand why we should be bullish. Okay, and what to expect. So I'm moving on to the daily time frame. So now on the daily, let me take this out. On the daily time frame, we're going to analyze this price action. And looking at this price action is not to look for bearish entries. You could do that. But for me, this is within enough, this is enough discount level for me to start looking for bullish projections. So I'm just going to give you some bullish projections based on Fibonacci ratios and the structures of this range. So from what we did on the weekly, this is a swing high. The previous insights is to give you why I'm calling that a swing high. This would also be a swing low. Okay, and then scaling the premium and discount of this range would have this. All right, now we have this range, we have this picture. So now what we want to do is find out the key levels within this range. That's where Fibonacci comes in. So we take from the low to the high to spot out all key levels within premium. If we take from the high to the low, we spot out the opposite, which is the key levels within discount. This is a cheat code. So now you have all possible key levels within this range before price can move to the next direction. So now let's pick out the mitigations to see those which are still open and those which has been mitigated. From the first price action, which would be this, okay, we got a mitigation on the 78.0, or we could say 78% Fibonacci within discount. We also had the 88 here, which is the highest. Multiple mitigation here. The 61 has also been mitigated, and the 50%. So if we look at all these possible scenarios, remember we're trying to graph out the open key levels. what we have is just key levels within premium. Okay, so discount is filled up. So there's every tendency that price could be going bullish. This is another confluence from Fibonacci ratio. Okay, so now what we see now is a possible reaction from here, something like this. The price starts to go up, right? Or we could see a rejection from here big enough to do this. That this is the only possible scenarios we can see. But this would be our next obstacle. That's if we're going to the lower time frame. Okay. Now let's look at it from a pattern-like perspective. Now we have the Fibonacci's out. You can see we're already very close to harmonic patterns. So we're just going to draw out a pattern reasonable enough to explain key levels within this, bunch of key levels to give us a scenario to support maybe the bullish aspect. So now let's look at the pattern. If we trying to draw a bullish pattern, we would say this would be X, A, let's say this be B, and then this be C. Or let's say D was, now we would match the ratios. We have to match the ratios, but we're trying to draw out from every swing point. So as you can see from here, I marked a swing point, also a swing point. So I'm trying to mark out every possible swing point at first before I give any most likely projection. So, but they have to be around key levels. Okay. Now, when we look at this scenario, what we have already, we can already tell the price action from wave X to A, right? We can also see the projection from wave A to B. Now let me use an official pattern. So let me look at this from a Gartley pattern perspective. So I'm just going to shrink this key level. So you just follow me. If you have a diagram of it, let me see. Let me push this to the side so we can have a diagram here. Okay. So I'm just going to match the key levels with the information on the diagram. So we could have something to match everything up with. Okay. So let's say we have A to X, okay, A to B, 61.8. This has to be 61.8 Fibonacci level. So let's say this. Okay, this is 62. So this would be probably valid. And then we would have to have from B to C, this has to be around 30. This has to be around 38 or 88. So this would be 88 or 38. So that let's say this has to be okay. This is the closest. This would be the closest. So this would be C. Okay. So it's matching up with what a Gartley pattern would look like. And from C to D, this has to be around 61.8. So we have 61.68. This is, remember, for those of you who don't know, who have not watched the series, these are in percentage. Okay, I'm calling them 61.8 because I'm calling them in ratios. So these are in ratios, sorry. These are in percentage. Okay, so when I say 61.8, 88 points, but when you look at the ratios here, you're going to be seeing 0.668, 0.80. I'm just following the ratios on the Fibonacci, but it's the same thing. So that's why you have to watch the series. And this is the reason mainly why we had the series available, so you guys could also have insights to how this stuff work. So the last leg has to be around 1.61 or 1.68. So we have 1.65. So this is actually in line with the Gartley pattern, if we should look at it from this. And then we're already seeing the reaction from here, which is resting at this being 88, okay, 0.885. Let me call it that instead of 88% to stop the confusion, just in case anyone is confused. But this would be what the daily is saying using Fibonacci ratio and harmonic pattern. So we'd have this projection, and with this, it supports a bullish possibility, okay, to clear this high, right? But in smart money, in terms of smart money, then this would be an obstacle, the 61.8. Because if we're wrong, then probably there's another pattern playing out here that we can't see. That's on the lower time frame. Like I said, harmonic patterns and Elliott wave give me confidence to understand the higher time frame. Okay, this is now the daily time frame. This is a very short analysis to show you how easily you can have insight on the direction. Okay, so those of you who are crypto traders now, you know how you place your trades, you know how much pips you're looking out for, you know what your SL is. This is just a directional bias to show you for the long run what I'm expecting. So I'm bullish. Let me take all this out. Okay, let's draw this. You know, something like this. Now when we have this, I could say my first of official target would be this. Let me take this out. Okay. And then this would be my first obstacle in terms of being bullish. All right. Now let's look at it from the light of SMC and supply and demand. What else can we say as confluence to this? We could see price clearing out this low, which we talked about internal and external lows in the context of smart money. So that was kind of like a quick manipulation. We can see prices correcting back up. So with all this confluence here, you can see my reasons why I'm bullish. And this could be my first overall target or something like this. If price doesn't break structure here, then I become bullish to clear out this high. And this would be my analysis using harmonic patterns. Okay, harmonic patterns is all about using Fibonacci ratios. You know, the patterns itself is just an act. The names you give to them, bat, shark, Gartley pattern, you know, butterfly, whichever name you want to give to it, you just have to know how to apply the Fibonacci ratios, which is, you know, the most important aspect. So on that part, you can watch the video over again to understand how I use these stuffs in context of market structure to make everything easier. You know, and you can subscribe to learn other methods as well. Thank you, and I'll see you on the next episode. Bye.